Hello, guys. Let's get it. It's Social Trades once more. So today, guys, I was kind of out in the morning session, during the morning session, but I came back while the session was still on. So let's get it. Uh, we opened here at 7, as you can see. We went up like that, coming down like here, went up. Let me see, according to time. Okay, I'm watching time. Yeah, this open range high here. This is open range low here. This high here and this low here, right? Or open range low, open range high right there. So that's what we have. And then it rolls like that, goes up like that, right? So how are you gonna attack this? If you were me, this would be your initial sell side, and this up here would be your initial buy side, right? That's how you were gonna attack this, right? But then this move goes down, taking out this low here, right? And then goes down like that. The blue fair value gap here is the first presented fair value gap after 930, right? 20 as March as written there. So what happens here is that uh, we open like that, can get here, goes there, finds support. Nobody's here in the lower quadrant of this fair value gap here, as you can see. Goes up, comes back using new day here, then goes up, uses new day once more, goes up. Nice consolidation there, respecting this FVG, comes in, uses new day, goes up here during the open here. This was the critical move here at 930 here. Because here at 930, when it opens, at 930, the gap was 930. There we go. So the gap is really literally this size. So this here is the regular trading hours opening range gap here. I'm gonna make it blue, dark blue like that, dark blue like that. Gonna get in there. Okay, this is the RT, regular trading hours, opening range gap. This one here. So the market opens here, goes up, taking out these two relatively equal highs, going up, inversion fair value gap here, hits it in there, respects it here, and then the trick was here. It respects it. This here, let me just mark that in another color. I'll make it white. I'll make this white area. I'll make this guy white here. Come on, whitey. Be white. Be white. I don't feel this white. I want it to be really white. Go, yeah, be white. Yeah, like that. Nice. So, okay, this one here, I'm grading this fair value gap, this one that you see, this one. So, I'll put it back. So what I'm trying to show you here now is one thing. The market here, this is the inversion fair value gap here. Look at it. If we zoom it, look at here. Nobody's in the upper quadrant of this inversion fair value gap. That's telling us it's really an inversion fair value gap, right? And it's also on a quadrant level here, as you can see here, right? Or on an octant level, I mean. So it uses this inversion fair value gap, shoots down just like that, shoots down like there. Wait, it shoots down here, right? Taking out cell site that was resting here, and then goes back once more up there. And then the question is it gonna take this high here? Octant level once more. Look at it. Bodies goes up. I'm gonna take this now. Still, it can't pose any candlesticks up here. Can you see that? Still, it can't do that, right? And also, if I do this, this is a suspension block here. This one, it's a SAS. It's a bearish suspension block here. This one. So, initially when it came in here, look at it. No bodies were up here. I was selling immediately during that time because of it was showing me that it does not want to go up there. I was selling, it did that, proved me more that it does not want to go because it took out this high and this high here, right? Goes down there. I'm like, ah, we are bearish. So this we're selling. It came back with this one. I was like, I'm selling again here. Sold, played around up until what time? The macro time. What macro time? 10:50, right? Up to 11, 11:10, right? Look at when the macro kicks in, I'm gonna pull that here so that we can see clear. Because there's a macro secret. Look at the macro. This one goes up, can't close up there, smashes. This candlesticks goes up, rejection block, order block, goes down. The next one up, if you take your Fibonacci, you'll measure this. 75 level there, hits, goes down. So eventually shows that goes up, hits order block here, goes up. And if you measure this week here, which we can do together, I guess. Where's that week? We're gonna measure this one together. There we go. Which one is most critical? The green one. Go above it there, but then soon after we go below it once. The next candlestick can't get even reach there, goes lower. So I was literally selling in this suspension block, this one here. I was selling here, right here, here I was selling, in here I was selling. And I held it, understanding that it's doing this because it wants to use the macro time. And then in the macro, let's see what happened. There we go. Oh my God. Woo. Look at the smashes, take on sell side there, right? That was beautiful. That was very beautiful. This was measuring this there, so I can remove it now. So, but that was the sell that I took. And of course, as I was talking, things are happening, but lots of partials should have been taken here, right? Okay. This is open range here from yesterday. These levels here. These are not range from yesterday. Okay. Right. So that was very beautiful, guys. The sale was very nice. So I was thinking I'm gonna hold this the whole day. But it seems like it's just retracing into that. Okay. Like to see this one remain open, really. Yeah. Let's see. Pen range here yesterday. It's loads here. This regular hours trading, regular hours opening range gap. This one. So now we're hitting the first presented fair value gap in blue, and also new days there. A lot of things is happening there. Okay, let's go to the 1 minute. The 1 minute time frame. Fair value gap in there. High of this fair value gap. Let's see the 1 hour time frame. See that the 1 hour time frame is the key time frame here. Okay. Took out sell side in there. Okay. Because really, really, guys, to tell the truth, I was also thinking about this. I want to know how many of you are thinking about it too. Here on the 4 hour. Here on the 4 hour, we have a nice fair value gap with the there we sell it. That's nice. Take out sell side. It's used again here. Second time as an inversion, goes down, take out sell side. Now, after doing that, market is more likely to come in here. So the question was, is it this because this is a daily volume imbalance in what? In yellow. So does it have high precedence over this PD array here, which needs buy side here? That's the question that I'm asking myself. So I'm kind of weighing it. So here I was putting my leg in case this one takes more precedence over this one. What I'm saying is that I took this cell to sort of evaluate if this volume imbalance here has great, uh, great what? Influence over price, which can override the fact that this for our fair value gap here, price, it needs buy side here. So price is like doing everything, but it's drawing back in there, right? Because it wants to go in there. Probably even go higher, but this is the main thing that it's going for now. So I'm in that sell, break-even situation. So it was a sort of a test. I'm still in the test, and I'm still gonna watch and see what price actually delivers. As you can see here, initial buy side is resting above the initial sell side is gone. AM buy side here, sell side I mean is gone, right? It's gone. So there's only AM buy side there, or right there above here, and this one. These are two relatively quite lows. So it's like it's jagged on the downside, but then let's see. Let's see what it wants to give us. But this was a trade that I took, and it was beautiful, right? It was beautiful. I'm bringing you to, but this trade here was beautiful to the downside. Macro, use the macro. Look at 1010. By 1010, it's somewhere here. Okay. If we go back, if it goes above here, and then we'll be rendered bullish, I guess, after that. There we go. When I say I guess, I'm not saying I guess in that sense. Let's see, because it was above half opening range gap. So let's see what happens here. Because this might signal that we want to keep going higher, but let's see. Okay. Goes. Okay. That was a nice run. From because me, I was selling from in here. Look at that. That was a beautiful run. Made all your money like that, taking major profits in there and keep trailing our stop coming with it like that. Probably you'd be out if you were trailing your stop. Because me, I was explaining some other things, it kept doing this and it's coming back like that, right? But I'm not even worried about that. I'm thinking that now, since what? Since we closed above this regular trading, regular hours trading range gap, we might be, we might have found ourselves to be rendered what? Bullish, bullish. What? Bullish, 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 bullish. Yep, that might be the case. So we might start looking for what? Bullish scenarios to take out these highs here, which I was not thinking. But if we take out this highs, we're sure gonna go outside of this in here. Right, right, right. Right, right. Look at that. Closes above it here. And look how beautiful it uses its consequent encroachment there. It goes up. Ooh, okay. Let me go up a bit. There you go. Well, that's an immediate rebalance. Even this one. So the market should explode. Hmm. So, thank you guys. This social trades, trade with care and trade with love. Mm, I wanna make another video, so I'm gonna drop this one. I'll see you in the next one. More explanations, more reasons why we went into it, what really happened, everything, everything that's on, right? So now, these highs here look sweet and even to reach somewhere there. So that's why I wanna go out and see what I'm gonna do. I'll come back with another video. This social trades. Take care. Boom. Oh, boom. Boom.